welcome to Nirmal Bang, ladies and gentlemen. I'm Neetal Dadia. We have with us Ria Singh, technical analyst, currencies joining in. Ria, welcome to the show. Ria, firstly, with regards to the Fed rate hike as well, what's the implication that we're seeing in terms of the Indian rupee?
Well, if you look at the Fed, they have gone for a rate hike. Now the Fed rate stands at 0.5. Now, if you look at the statement that has been followed after the Fed meet, they have been quite aggressive in tone and also hawkish. So could be safely said that Fed is on the route towards setting the policy rates and the statements on more of a hawkish tone. So shift from dovish to hawkish is something of a highlight in the current Fed rate. Also, if you look at the other statements that have been coming in from the Fed governor, he has said that he is looking at 6 rate hikes in the current financial year. In the current 2 financial years. So in the coming 2 financial years, there could be 6 rate hikes that will be coming forward. Also, 50 bips rate hike suggestion is on the table if the inflation balloons further from here. It's already standing at 7.9% on the monthly basis. And it is anticipated that for the March data, it could worsen further. So if it balloons on a much critical side, then 50 bips could be in the rate hike could again be done from the Fed itself. So this is definitely resulting into the sentiment that the Indian rupee could weaken forward. There could be some dips coming forward, considering that the RBI has reduced its forex reserve and has aided the Indian rupee in order to get the balance, some balance where it has been a highly volatile sessions. So going forward, I think dollar index will be on the higher side, and also Indian rupee will be on the depreciative tone towards 77 to 77.25. So if there is a dip, it is an opportunity to go long into the Indian rupee.
Right. So that's with regards to the impact of the Fed. Now, what's your view in terms of the UK spring budget and its implication on their currency?
Well, as far as the budget is concerned for the UK, obviously, if you look at the pound, it has not been doing so well. It has been on the lower side from the past few months. So, of course, inflation is the major the problem that every country is facing, and UK is not much different from that. So controlling the inflation has been on the prior side from the Bank of England as well. So they have been going for a rate hike. They started first with the rate hikes. So I think some cool off could come in if as the effects of these rate hikes comes into the picture. Of course, the first thing that the whole UK is anticipating is how Sunak will manage the cost of living there. Because if you look at the current scenario, high energy prices is raising the possibility that the public finances, which have recovered due to the ample of support that the Sunak has provided in the past 2 years. But if the energy prices continue to rise, it could worsen the recovering public finances. So altogether, his statement on where he's standing with the managing the cost of living and where he'll be with respect to the household budget. So these two factors are something that market will be eyeing on. And what is the trade deficit? What is the deficit that is looking for? Because considering the energy high prices, it could surpass the limit. So also inflation numbers are on the in this week. So budget and inflation numbers. So it's a very busy week for UK, and pound will definitely react as to where the inflation numbers will come in, considering that the Bank of England has already done 2 rate hikes. And what will be the major headlines of the spring budget?
Right. And with this overall, if you go to see in terms of the yen, that has slipped to a 6-year low. So what's your view?
Well, if you look at the Japan economy, it has been facing hiccups in terms of recovery. Household and business costs have risen owing to the, uh, you know, uh, owing to the rise in the energy prices. On the other part, Fed getting on the route of rating on rate hikes, asset tapering and restrictions, restructuring its balance sheet. I think it is again putting much pressure on the yen. So if you look at the policies of both these countries, US and Japan, so both of the policies, the gap between the uh, policies have been widening, because where Fed is going for a asset tapering and liquidity, getting the liquidity out of the market, controlling the inflation and so on. If you look at the statement that has been coming from the governor of Bank of Japan, he's stating that uh, he'll be maintaining a continued liquidity and support in the economy, and any action for now is not required in order to taper any of the liquidity or the support that he's currently providing. So all in all, I think the future of the yen still looks bleak and will be on a depreciative tone unless Bank of Japan changes anything in its policy or the government altogether steps in. So unless this happens, yen will be on a depreciative tone.
Right. So, Ria, overall, Ria, can you hear me?
Yeah, yeah.
Yeah. So, Ria, what would the strategies be that you would recommend?
Going short into the JPY INR, though it has corrected today, I think it will continue to correct. You could sell the JPY INR within the levels of 63.18, 63.12 with the stop loss at 63.30. Keep a target of 62.85. You can go long into the USD INR above the level of 76.38 with the stop loss at 76.12 and target at 76.55, 76.65. So these are the two strategies that one can go for.
Right. So, these are strategies one should be watching out for as well. Thank you, Ria. Thank you, participants, for joining in.
Thank you.
Subscribe to our YouTube channel for in depth interviews of India Inc. and press the bell icon so that you do not miss our updates.